Good morning. It is about 10 to 10 UTC on, what does it say? Tuesday, the 27th of August. Anyways, going through the economic data and breaking down Bitcoin. So, looking at the local stuff here, durable goods came in, not the biggest thing, 9.9, but very much massively different than the forecasted. So, generally, this is expected to be positive or bullish for the US dollar. Which could coincide with some downturn in the market. Generally, the dollar currency index and the TradFi markets are loosely inversely correlated to some degree. Bigger stuff starts to happen. Well, we've got the consumer confidence. That's another big one. Happens about half an hour after the New York opens today. But the big stuff we're all waiting for is Thursday, Friday. Right now, we're in kind of some grindy down price action on Bitcoin. However, it's getting close to doing some nice higher low tests for potential continuation. So we'll go through that as well. Looking at the local liquidation heat map, we had the move up. We talked about this yesterday, how we took a lot of that local stuff, started wicking it down, breaking it down, and actually just grinding to the downside, which is doing two things. It's trapping longs and pushing them out. So we've had some long liquidations in this move, allowing shorts to build to the upside. We'd like to see that flip soon into kind of short trappy price action. So if this grindy downside is trapping longs and basically just force liquidating longs, grindy up is hopefully going to start building some shorts and allowing us to capitalize on getting back above some of these bigger levels. But to look at a higher time frame as well, as far as liquidity goes, there's quite a bit going right back down to 61.3, 61.4, which wouldn't be the worst thing. I mean, obviously down here, this is retesting all of the previous structure as far as liquidations. It's when we start losing 61.4 to 60K especially, we have to open up the idea of going back towards 57K at the very least. There's a lot of stuff left to do back there if we end up failing back below the previous range. So we don't want to see 61.4K lost at any point. And if we do, we want it to be a quick, nasty drop into the price, and then 4-hour daily closes above that previous range. Just to look at also the liquidation map here, where we are as far as the localized liquidity, we've got quite a good chunk of short starting to build up around 63.5. Some really high leverage stuff as well. Definitely more short liquidity, even in the local structure. In the local, like the lower time frames and stuff like that. So there's still stuff to the downside. The longs, I think, that could easily get us back down to 62K, and I'll show you guys in trading line why. But if we do start doing some strong regains on some local, like really local stuff, like 62.8, 63K, then we have to start talking 63.5 and higher potentially, as there's a couple metrics pointing that direction as well. Looking over at trading light. So breaking down a couple things. First off, looking at open interest. Open interest has been falling in this overall structure. We're only now seeing some kind of increases. Also on the liquidation side, mostly longs have been getting punished, as I said, in this kind of grindy down price action. Same thing as remains as yesterday, right? If we lose this 63.5 level, which we did, nice back test to go lower. We want to start targeting 62. You should be at least 1 or 2 profit targets out in case you caught this short, just because we're about 1.4% or so down from that failure. 62K looks nice. That's basically the order book imbalances. So if I go a little bit closer, this is actually showing you order book imbalances for longs. And there's a specific block down here that I'd love to get tagged because underneath that, there's no imbalances. So there's no real reason to go all the way back to the downside. If we do, I think there's a higher chance of us breaking 62K, then likely we'll go back to 60K and potentially sub 60K. But for the time being, we've also got quite a bit of short imbalances in the books, these little orange lines right above us. So if there are some localized reversals, bring us back to 63.5, there's definitely enough imbalance in the books to get us back to those places. And overall, like I said, we have been grinding to the downside. So basically people trying to long until eventually there's going to be a capitulation moment and we should see some reversal. There's some nice decent levels. 63.1 looks good, but even lower time frame, like 62.9, you can start getting above that to put some of these guys out of position, some of these late shorts. But in general, if we look at the higher time frame, with the overall delta here, it's still majority red, pretty on the way to the downside. So it's majority red delta. That means majority shorts, market entry shorts. And there's definitely enough liquidity to drive us back up. However, we need to see gains of level. Even on the 4 hour, 62.9 is looking like that kind of attractive regain to get us back up higher. But until then, you've got some localized downside priority. You've got 1 hour, 4 hour downside priority. And yeah, that's the direction for the time being, with some interesting levels below. So hopefully, if you caught a little bit of that short exposure, that's fine. Lows that are longs, excuse me, that are sub 60K are still 100% valid, and we're still looking for the higher low continuation. We're still looking up until we start failing 61.4 and then 60K. Once that's failed, we have to rethink of our idea, and we're probably going back to like 57, something like that. So uh, looking at trading view for the general plan here, and I will break this down. One thing I just want to mention, this is just an indicator, looks at crypto capital flow. Large caps very much bottom, like really low values. Stable coins very high values, so we're seeing a lot of people forced out. If we do have some local regains off of the daily open and the July Q3, that's likely going to see a push back up to retest those floor structures, 63.5, potentially even 64K. So keep that in mind. We are getting kind of like overextended to the downside locally without having a bounce, but again, there's downside priority locally, higher time frame. We are regaining. This is like the third range that we've created from the lows at the beginning of the month. So we want to see this regains to be strong, and eventually anything that gains August, we have to start having that conversation about going back towards June potentially. So for the time being, you've got downside priority, treat it as such. Don't try to long into these lows until there's actually a regain of level. Daily open July Q3, these are 62.8, 62.7. Great little structure here. So if you see that gain, definitely something to keep an eye on. Don't expect it to just send straight to the upside. It could, but with the amount of short liquidity we have. But if we do start kind of grinding back up, it is trapping short. And there's, like we saw in the Delta for order flow, there's definitely a lot of shorts here that could fuel an upside drive continuation. So keep that in mind. For the overall plan here, just to look at what we did from yesterday to today, and I'll break down each of the different points. We were looking for a hold if we had a continuation here on the level to go higher. That really just played out Sunday. However, that's still a valid trade if we get back above 63.5, invalidating some of these resistance points. One of the issues that we have is that we've lost this little local weekend range, so we are technically losing, going lower. If there's the local regain here, which is what is potentially playing out with this, we want to see that drive up back to that previous floor at 63.5K. The failure that matters is literally what we're potentially doing now. We want to see this close above. If we start closing below and bearishly back testing July Q3, likely to play out this scenario down to about 62K at the very least. There's a lot of stuff down here to do, as well as, an unbalanced order book on the way up, as well as all the way back down to 61.4. Like I said yesterday, the free longs are kind of gone until we start regaining stuff. You're in a grindy downside price action. If we go back up to 63.5, we want to see a regain. If we don't see the regain, we see a bearish back test. We're playing out this, right? That's very simple. You're looking for that initial retest. Why? Because you failed it, you've bearishly tested it, and you've gone lower. You're also created resistance. You created supply at these points to come lower. And the things that really start to matter to break stuff is down here. We could easily do a little sneak collapse back into structure, but until we start losing like 60K, 60.6, to really have a collapse back in, I think the level's still for a long technically. So I think on the local price action, to keep things simple, you're looking really intently at July Q3, which is at 62.7K. A localized regain there could give you a move back up to 63.5. Yes, the initial reaction should be to take profit there if you catch that long, and then it might continuation fail back to the downside. However, the longer this kind of plays on this grindy downside, the more likely it is we're getting close to the end of the local downside move. I think other than that, just play the localized levels if you want to. It's not super attractive price action. It's pretty loose on stops if you're taking a short. So again, if you were able to catch some of those shorts from yesterday, likely I would say you should be at least 2 profit targets out of it. 1.4%, 0.7%, 50x and 100x leverage liquidation levels. So for the time being, yes, you've got downside priority. You're failing and going lower. We just opened a new hourly under the July Q3. If we get that bearish retest right now, that expectation is that we should have a continuation move back down to 62K and then all the way down to 61.4. If we do that move now, I'd almost expect an instant knee-jerk pop from those levels if we come back all the way to 61.4 without retesting 62K. But we're grinding down. Play it as such. It's not super attractive, but we're overdue for a corrective move back up, at least to retest 63.5. So until then, take it easy. It's not the most attractive price action as it was Friday and last week, but it is what it is, and we'll play it as such. So catch you tomorrow.